Well, I have to say this is fascinating. I was analyzing NVIDIA's price action, and I noticed there's some potential short opportunities comparing it to pre-market opening that day, comparing it to the open of the previous day over here. And I noticed some really great trade setups. And in right in the middle of doing that, however, I noticed, what would I do if I wanted to go long? And the 5 minute range opening play would have been intact as well. So I want to go over both sides of the coin on this particular day. I want to look at the short opportunities and I want to look at the long opportunities on how on the same day, the short traders and the bulls the bulls and the bears could both make money on the same day, on the same stock, if they know what they're doing. So let's break it down. Let's just take a quick look on the 2 minute chart. Here's the 5 minute range. Let's start with the bullish for a second. 5 minute range. Here's the high of the 5 minute range. I love the momentum plays on this, especially when it consolidates at the high range. I call that a momentum play because your stop loss is very tight underneath the range and you get in as soon as it closes. So you're in up here and you put your stop loss. Now, sometimes I'll put my stop loss on that candle, right? So if I put my stop loss on that candle, I have even a less of a risk. But let's say I used it at the bottom of this range. I still would have got 1, hit target 2, and I would have taken my profits. Okay. This also happens to be the area that I noticed the first short for me because it could not hold. This line is the close of the previous day. So I first started this analysis. Looking at pre-market high and the close of the previous day. Those are important markers for me. That's where I do a lot of my trading, I noticed, and I really like the effects that I get. Here's the close, and then it goes into after hours. The close is right here. And so I'm looking at, I was starting this journey, this analysis with the idea that there were some closes that I wanted to take a look at. Now keep in mind, this is only trading the idea that it cannot hold above the close. There are pre-market highs, previous day highs. There's all kinds of support and resistance levels you can use. This is a close of previous day trade only. So I noticed right here, in my opinion, the most riskiest of trades would be this first attempt. It can't go up, it turns red, it starts peaking out, and because I know that's the close of that day, the riskiest trade for me would be to short it on that candle as soon as it closes below the close of the previous day. As soon as this candle closes below that on a big wick, you could start the trade right here on this next candle. The next candle hops over and it turns red, and who knows, it could have went down. Let's say we enter in a little late on it, and let's draw that out right now. We enter in, say, at the bottom of the candle, and our stop loss is at the top of the candle. And what do we have? Let's take a look at that. It looks like it was at least enough to get a 1-to-1 on it. So our stop loss is at the top of that candle, that second candle. We enter in somewhere at the close of that candle, and we have a 1-to-1 hit right here. And a lot of times I'll just break even on these kinds of trades. So let's say this trade was a break even. It didn't really work. Okay, I got you on that. Over here, it can't hold again. Pops up, turns red. As soon as this candle starts to close down here, and it closes below this giant candle, I think that's what they might call an order block. I'm starting to learn about that. And sometimes when price comes back up to that area, which it looks like if you use both of these candles as a giant order block, and it creates a new pivot lower right here. So when price comes back up into that order block, this is my favorite short over here, by the way, and that's the least riskiest short over here. We'll talk about that in a minute. These are more riskies because I'm not really waiting. What I am doing is using this red candle that closed below this candle here as an entry play where I could probably get short on that candle if I really wanted to play it, with a stop loss up here. So let's look at that. If I were to do that, stop loss above that, entry on the candle when it starts to turn red, stop loss above the wick on that thing, we get 1-to-1 right here. And it really doesn't go to break us out. So if we would have stayed in it, we would have gotten 2-to-1 on that right there. Okay, and so that would have been this particular trade up here. Another way to play this trade up here, let's take a look at another option that we might have. Instead of jumping in on this red candle here, let's say we wait and try to get in on the next candle as it's breaking down below that candle there. And we put our stop loss at the top of that candle looking for momentum. And let's say we get in halfway on that candle right there. So we have our stop loss above that red candle. And again, even if we got in on that candle, we would have hit 1-to-1. I would not have let it come up here. I would have broke even on the back half, or if I didn't take my 1-to-1. Well, actually, let's look at this. We got 1, and that candle peaked on 2. So you have to take it when it hits 2. I'm starting to learn that I have to take, when it hits the 2-to-1, I'll even have it waiting down there from now on. I'm going to start letting my target wait for me instead of, because it whips down. Sometimes you don't get it. 2-to-1 you have to take. 1-to-1 is optional. You can take the 1-to-1, but usually when it hits 1-to-1, you break even. This could have been a break-even trade, or it could have been a 2-to-1, depending on how it was played. All right. So where is the next opportunity to short this? As you see here, now on this candle here, it did break below the close of previous day, but now it's bouncing off the top of the pre-market highs, which that's questionable, very questionable, especially when it created this green candle right here. That would have, it never came up here to stop me out. It went over that candle, but I keep my stop, a couple of ticks above. It could have stopped out. Let's be fair with that. It could have. Here we go again, though, with the rolling down, and we have price coming up into this order block here, where this is the last bunch of orders that were taken out with a previous, with a lower, a lower peak here, lower than this peak anyway. So if it comes back up into this area, and starts putting in bearish candles, this is find the narrow range bar, which, I'm not sure if it was in real time where I would have taken this. It's quite possible I would have taken it right here in this area here. It's quite possible once it dropped below the previous day, the morning highs, pre-market highs, sorry. That's what this red box is. It's a pre-market high. That I might have tried to take it just simply using this peak right here as my stop loss and entering in, when it breaks, this maybe even this trend line. I love my trend line techniques. When it breaks the trend line at the pre-market high, I enter in on this red candle here. So that's where my entry is, right here. My stop is all the way up here. And then I get, boom, 2-to-1 because I got my stop on my order waiting for me from now on. I hit another 2-to-1 right there. This is perfect execution, by the way. This is with accurate entries, well-placed stops, hitting this 2-to-1, having the orders ready and waiting. Now, it comes back up here, and it can't hold again. Okay? You got a doji, you got a red reverse candle, and right here is my favorite spot. Let's see where the trend lines are. I like to use trend lines in these kinds of situations. Probably would have drew the first trend line here. It's quite possible that I would have stopped out on this had I been too aggressive. I might have wanted to enter in on this candle here, this hammer, before it closed. And if I did, it could have very easily, it ticked over the top of this, but it didn't go very far over the top of this. Depending on where my stop is, it might have worked. Could have stopped me out. A better entry is the double test. It went up twice here. And I would have probably re-entered this trade, okay? And I could either put my stop here at the top, re-entering on this candle here once it breaks below. Let's say I wanted to really wait until it breaks this next trend line right here, which was created by this pivot, this hammer that might have stopped me out, okay? Right there, that pivot. So I enter in over here. Let's get rid of this so we can see clearly. I got my stop all the way at the top now of the M pattern, the 2 tries. I get in on this candle that started pushing red, and it came back up. I'm still long. My stop's up here. It stays and it goes down, and I hit 2-to-1 again. That's the multiple 2-to-1s here back to back on this particular trade. So these are all really interesting, well executed shorts based on the close of the previous day and the pre-market highs, both giving us some suggestion on how to play this. Now let's look at what to do if we're going bullish on this instead. All right, we already talked about this momentum play right here. There's a couple of ways to play it too, and sometimes I'll use that breakout candle as my stop loss. Had I done that, the stop would be a lot tighter because I would have put it in a different area. I would put it right underneath this candle here and entered in maybe on the next candle up or whatever. But let's just move it a little bit and find out where that would have been. Let's say I would have put my stop here. And my entry is on the next candle even. All right, so let's say it's more like this. Okay, we hit 1, we hit 2. I probably would have gotten out because I would not have let it come back. It never came back. If I was on break even, if I exited some of my position up here because I was really bullish, and I really wanted to see that thing go. Actually, it did hit 3, didn't it? Wow. In a situation like this, I want to have my orders ready. And I'm really seeing that that's a very important thing to do here, is to have your order ready, okay? So I don't know. It could have hit 3-to-1 right there, okay? Going along again after it pulls back. Going along again after it pulls back. Let's see if we're over trading that day. I don't like these pintails. That have been a warning sign to me, but it's possible I might have tried to go for the breakout right here, which when I do that, I like the candle I'm breaking out on to be my stop loss. So underneath that candle, and I get in somewhere up here, but I don't know if I even take that trade. It didn't even hit 1-to-1, but if it got close to 1-to-1, I would probably break even on this. Would not have been a profitable trade, I could see. All right, it may not even been worth taking with that rejection candle there. I'm not even sure if I would have taken that. I'm not even sure if that would have taken that. So those are the bullish moves on the day that I'm also talking about shorting this stock. Here's another area I want to talk about: the bounce, the test of the 5-minute range. We got to talk about this area here, because the strategy for a lot of people, and it is for me too, and this is probably where I would have failed trying to go long on this, is let the 5-minute range develop. Here's the high. It breaks out, we go long. But a lot of people say break out, wait for the retest. I like to retest sometimes. I will, especially if I miss it and it's way up here already. There's no sense in going that high. Right here, if it's under the 5-minute range, or if it tests right here and consolidates above it and stays close to the 5-minute range, we have a bullish opportunity with a tight stop loss. I like tight stop losses. Let's say right here it tests and closes above and puts in a bullish candle, and we're real excited about that, and it's kind of a big stop loss for me, because let's say we use the bottom of that range and we enter in, when that candle closes. And then we got a stop loss looking like this, an entry right here. It immediately fails, and we lose a completely total 1R unit of risk. Okay, and we probably wouldn't have been too phased by that, and wouldn't need to take this second trade, because we'd still be in this trade, because we'd be praying that it doesn't come all the way down and stop us out. So this second opportunity here with the hammer, let's say we missed the first one, it would be similar, because we'd want to get long right at the close of that candle somewhere, and we would have our stop loss underneath it, and we'd get long right here, have a stop loss right there where we get in. Right there's where we get in. Our target's up here for 1-to-1, 2-to-1. It just crashes right away, which gives us the idea to short. And that's why we got to be able to go in both directions. Now we need to analyze, why is it so weak here? Okay, it can't hold the close of yesterday 2 times. It can't hold pre-market highs. It's looking weak. Pintails, red candles, lower highs. Okay, well, it can't go over the 5-minute range. It's trying again here. I'm not so sure I would have tried this 5-minute range long after failing 2 times. Let's say we wanted to real quick before we, you know, conclude with our reason to switch sides and go short. Let's say we wanted to catch it right here. This hammer, it's going up real nicely. It's strong, and it touches it a 3rd time on this candle. Okay, let's say we use that candle as our stop loss. We get in on that candle there. We have a very tight stop loss right here. We really are bullish, say, and then it goes up, right? It goes up and hits 1-to-1. So yeah, you could, that's a 1-to-1. We had a lot of good 1-to-1s, 2-to-1s, and 3-to-1s. We lost. This probably would have ended up being one trade right here. I'm not sure if I would have entered twice back to back. Actually, it didn't stop us out on this one, so we would still be in the first one. So if we took the first one, we're only going to lose once on this. If we take the second one, we're only going to lose once on this. This would not have been 2 losses back to back. This could have been a second loss back to back, but it did succeed 1-to-1, so we'd probably be broke even on that. Now, the thing about this is, once you break even on going long, are we able to switch our bias that quickly to just go short? If we were long on this, we would not have really been... If we were long on this, then we would have hit 1-to-1. I'm not so sure I would have had the breath to simply go short right away on this candle right here. I'd probably want to reassess everything and let this develop. But if I did reverse, or I hit my 1-to-1 and I immediately go short, I would have lost on it probably, right? So that would have been a reverse and a failure. But I'm not sure if I would have acted that quickly. Taking the next short, that would have worked. We're already thinking, I don't think this is going to go up. Or maybe after winning right here, my mind would be, hey, this is working great. But then again, it's under the close of yesterday. It's looking, these green candles, these bullish candles are getting taken out, right? So I probably may even be, if I was bullish and then switching, I might not even want a short right here. I might want it to come back underneath the 5-minute range and set up a consolidation trade where my stop is right here. My entry is on this red candle as it closes, and that's where I'm trying to take my trade. So here we go. Stop loss here, entry on the close of that candle, and there's my stop loss on that consolidation area right there. My entry's way down here, and boom, have your order waiting on 2-to-1. We got 2-to-1 right there. Okay, so these are all the different ways of looking at this NVDA, long and short, and the different opportunities that are present right here with a quick eye, certain skills, different types of trading. We got momentum plays, we got break and retest, we got consolidation plays, breakdown plays, and trend line plays, all working out in this same meditation right here. So I think we should be flexible. Having one good trade is enough to pay the bills, but being flexible and having multiple setups that you can master is also going to be a benefit. So I hope you enjoyed the video. I did. Let's get better by the grace of God. Peace.